All right, guys, welcome to the new month. I wanted to share something with you today because I think this is going to be one of the holistic approaches you are likely to see from me because I'm going to be analyzing from the monthly, which I usually don't do, mainly because when I give you my analysis, it's usually at the end of the week, right? So I start from the weekly and I analyze down. But whenever a month ends, you want to start from the monthly, right? So just keep that in mind as growing traders. So just look at this. Whenever you look at price, you want price to be able to tell you a story. So now, mind you, I haven't gone through any of this previously. So what you're getting is my thoughts process as I am going through it, more or less like you looking over my shoulder as I look at the market. So this video might end up being in two parts because I'm going to be as articulate as possible so that you can have a fair understanding of what I'm looking at when I look at the market. All right. One of the things I want to do definitely is to clear my charts. I want to remove all drawings from my charts. So I'm just going to remove all drawings quickly on Euro USD as well, just so that I have a very clear picture of what I'm looking at. Yes. I don't know, just remove it. Okay, so this I just want to have a very clear picture when I'm looking at it on. All right, so starting with DXY, one of the things that I want you to notice right over here is how price, all right, we have price moving from this point to this very top. Now, every other thing that price has done in between has literally been in between this high and this high. So we'll call this internal range liquidity on the monthly. Now, what does that mean? It means that I want to see what does price want to do or where does price want to go on the monthly. When I look at price on the monthly, generally, because it's inside this internal range liquidity, one of the things I would like to see is I want to put my Fibonacci on it. Now, this is not something I always do, but it's something that is important to do. All right. Now, price is below the 50% level of the Fibonacci, which means that if price wants to reverse back to the top, this is in a prime location. If price wants to reverse back to the top, it's going to definitely try to find some other blocks, fair value gaps, something along those lines that it can work off, right? I see a fair value gap here that was taken out, but I also see that price gave me, this is June. June was bearish. July was bullish, bearish. This gave me an inconsistent, it's like a doji candle. It's not like it is a doji candle, right? So it's a doji candle. Then October was bullish for the dollar. Now, looking at the price as it is now, where am I looking at price? Where could price possibly get to? Now, when I say where could price possibly get to, I'm always thinking about or looking at a few things. Number one is liquidity. So let's start with liquidity. Given the current price, where's my current liquidity zones on the monthly? Because remember, we're going to do this as we are trickling down into the weekly as well. All right, so I have my liquidity zone right over here, which is the monthly liquidity zone. And I'm just going to label it as I should, as a monthly sell side liquidity. All right, buy side liquidity, I'm going to label this over here as buy side liquidity for my monthly charts. What's the probability that price is going to get there? It's not going to get there anytime soon. Now, because I usually do this on a monthly, I would ideally not even label this at all. But because you guys are here, I just wanted to see how I think about it. Right. Now, the next thing I want to label is any important fair value gap that I probably see on the market, because I usually trade with fair value gaps. So I can see one right over here. There's another one right over here. But just in the spirit of not making your charts clumsy, I'm going to keep only this one. right? Because before price is going to get to this fair value gap, it's going to get to this one. But I'll advise this: if you're a new trader, label as much as you can, right? Label as much as you can. So I'm just going to put my monthly fair value gap here. Now, another thing that is important for me to notice though is the fact that I have three bullish candles in a row over here. So these three bullish candles could act as an order block. All right, they could act as an order block. So I'll label something here, but for me personally, I would just keep it simple. All right, so I'll just use it as a, let's call it a monthly bearish order block. All right. So it's an order block that's when price gets to, price can look to be bearish. I will not hold so fast to it though, because if price gets here, I would, in my experience, would want to see price still get to that monthly fair value gap, even if price is going to go back to taking like a downturn. That's what I would ideally look forward to. But this is just something to note. How will I use this one? I'll probably use it for like an intraday trade. So let's say I'm trading on the 5 minutes, I'm trading on the 15 minutes. And I see that when I set my 1:2, my 1:3, it actually hits that monthly order block. I'm less likely to commit to taking the full 1:3, especially if, let's say, this particular segment aligns just about, let's say, around 1:1 or 1:1.5. Then I might just commit to taking either 1:1.5 or 1:2. But I would, if I'm going for 1:2 or 1:3, I will closely monitor that particular trade on the higher time frame. Any signal I see of a reversal, I'm most likely going to end it. So that particular monthly order block is not a hard and fast rule that I'm necessarily looking at, but it's something I want to keep in mind when I'm trading. All right. Remember, trading is an art. All right. It's a science, but it's also an art. Not everything is going to go exactly your way. So sometimes that's where experience plays in the most, and experience weighs in the most. All right. So let's come to the weekly charts. I'm giving you guys a ton of value here, guys. I hope you're following. Now, weekly charts, let's see what the weekly is doing. On the monthly has, remember, the monthly has dropped below the 50%. Now, I told you once the monthly drops below the 50%, we could either look to see price go to a reversal, all right, or we could see price go up and then come down again, like to confirm the bearishness on the monthly. So let me go to the monthly quickly. I'm trying to give you guys a lot of value, as much value as I possibly can in this video. So please follow me. So what I mean by this is, because the price has dropped below the 50%, which was somewhere around here, all right, because price has dropped below the 50%, we could either see price do something like this, so it will come up and then keep going down again on the monthly. Now, what I'm showing you, this can even take like a whole year for it to play out. What I just showed you here, because remember we're on the monthly chart, it can take a whole year for this to play out. Or we could end up seeing price just keep going down like this, which is not a very likely scenario. Why do I say it's not a very likely scenario? Because price has made a very bearish movement already here. From this point, from February 2025 all the way to June 2025, the dollar had been bearish. All right, we've had a bearish dollar, a straight bearish dollar. Ideally, what you want to see is you want to see price return, all right, and then or do a retracement and then drop back down. So we are in the retracement phase of the monthly chart. Remember, you're telling a story. So if I look at this, what is the 50% level of this? Because usually price will return to around the 50% level in a retracement before it goes down. This is considered a leg of price. From here to here is considered a leg of price. So ideally, price will return to halfway or the midpoint or around the midpoint before it retraces down. All right. So looking at these factors, I'm looking to see price possibly go bullish, or DXY go bullish. That's a bullish dollar on the monthly charts. So that's just what I was trying to explain to you. Let's go to the weekly. We look at the weekly, and the weekly obviously comes to support the claims I'm giving in the monthly chart. Why? Because you can see price comes down. So let's look at this leg of price. Price takes multiple steps down. It comes down, it creates a low over here. It comes up here. It comes to take out the previously created low, which is very significant for me in my style of trading. And not only does it do that, it gives you a candle that signifies that it wants to go up. All right. I don't know if it's hanging man, shooting star, whatever, but that particular one. It shows, or a hammer. It shows you that it wants to go up. Now, from there, we proceed to have price give us bullish, this bearish, but it's generally a bullish movements that we are in, right? Now, one of the things I like about this kind of movements is that price is delivering efficiently. What do I mean by price efficiently? We don't see a lot of fair value gaps in the leg of price from here to there. As a matter of fact, I see zero fair value gaps in the leg of price from here to there. What does that mean? That usually means that price is unlikely to retrace before it goes up or give a deep retracement. Usually, when you have think of it like a painter. When you paint and then you have a spot, if you paint too fast, you're likely to, let me put it this way: you dip your roller in a bucket of paint. You paint too fast, you're likely to have like a patch of paint in the a patch of hole in the paints that you just painted. So what are you going to do? You're going to roll your roller back up to fill that particular hole before you keep going down again, right? And that's what price usually does. So when I see price deliver efficiently like this, for me, it signifies that price could potentially keep going up. It does not mean that it's going to forever go up, but it could potentially keep going up. Let me give you an example for something I just said. See how price came here. All right, look at this. Price, let's take from the very top. So price dropped, right? Price drops quickly. What do we see here? I think I can see a little fair value gap over here. Do you see that? There was a little inefficiency there. So price goes in to go and cover that inefficiency before coming back down again, right? Right over here again, price creates an inefficiency here because it moves too fast. So price is going to retrace back into it before going down, right? Once again, we see the same thing happen over here where a gap is left. So price comes to fill out that gap before going down again. And that's what I'm talking about when I talk about inefficiencies. So the fact that I don't see any of that in here, for me, signifies that this week could also be a very bullish week. Do you understand? So that's for the dollar, mind you. So that means Euro USD is going to be bearish. All right. So that's for the dollar. So what's my weekly target here? I would update it to this. This is going to be my target for the week. So this week, if price is bullish, I'm looking at price taking out the buy side liquidity. Full stop. If I'm able to get price to take out this buy side liquidity, I have no business trading. Genuinely, I have no business trading if I'm able to get this correct for the week. That's all I need. That is absolutely all I need for this particular week. Now, let's see whatever price can give us again. Because once price take this out, remember, if price goes fully bullish here, it's going to leave a fair value gap here. Then I may not trade next week. I may not trade next 2 weeks, whichever one comes first, like however the price hits, delivers from here. But what I'm doing is I'm waiting to see how price delivers, and then I'll be making my decisions from there. So once price delivers and hits this, I'm no longer looking to trade. I want to see what price wants to do next. All right. So we have the DXY doing this. Then let's go to the daily charts. Notice how I didn't give you any sell side liquidity for this one. It's because there's not really any sell side liquidity to actually look at over here. The closest sell side liquidity is at the side. That's the closest, because ideally, when I'm talking about sell side liquidity, I want a candle whose wick is lower than I want a candle whose wick is lower than the candle on the left and the candle on the right. All right, I want a candle whose wick is lower than the candle on the left and the candle on the right. That's basically it. Once I have those two, then I can call that my sell side liquidity. If I look at the leg of price from here going to the top, you don't see anything of that nature. All right. So your sell side liquidity is literally the same as your monthly sell side liquidity. Your weekly sell side liquidity is basically the same as your monthly sell side liquidity. So the next leg of price I'm looking at is for price to reach here. There is something significant I want to show you here, which I'm not showing. I haven't shown because it's not. I think it's been invalidated. But ideally, if price was somewhere down here, I would have drawn a Fibonacci from here to here to identify the midpoint of this particular wick. Now, if price hadn't reached the midpoint of this particular week, I would have been expecting price to react. I'd have expected price to react and probably go down, right? Sort of like what price did on 6th October, the week of 6th October, right? You see how price hits it. It hits the midpoint and it drops down. Usually you see that when you have very long wicks like this. Price would react at the beginning of the week, the middle of the week, and the end of the week. So that's just extra bonus for you guys. So just keep that in mind. All right. So looking at this, because price has crossed above the midpoint of the week, the next place I'm looking at is the weekly buy side liquidity. So that's what I'm looking at. Let's go to the daily. So now remember, one of the things I always want you guys to remember is an easy way. Look, I'm giving this thing I'm telling you guys right now. You've got to pay me like $10,000 for what I'm about to tell you, because this is it. This is it. This is it. If I like what I'm about to tell you, this is it. How do you know the direction of the market to trade? Take monthly. Where do you expect monthly to go? Let's say bullish. Weekly. Hey, what do you expect the market to do? You expect the market to buy. All right. So weekly, what do you expect the weekly to do? You expect the weekly to buy. Daily, what do you expect daily to do? Let's say we expect the daily to what? Buy as well. Right? You come to 4 hour. What are you expecting the 4 hour to do? It's going to buy. Look, let me tell you something. If this is what you have, even if the 1 hour tells you that it's sell side, it's bearish, it's sell, don't sell, because you have everything in the higher time frame telling you to buy. Why are you selling? Why are you selling? You're on the 15 minutes. The 15 minutes is telling you to sell, but monthly, weekly, daily, 4 hour is telling you to buy. What on earth are you doing selling? What about if you have a mix? So you play around with these things, but let me tell you the best approach to it from my perspective. You take the monthly, the weekly, the daily, and the 4 hour. If you have 3 out of 4 in one direction, trade in that direction. If you have 4 out of 4 in one direction, that is absolutely perfect. If you have 3 out of 4, trade in that direction. If you have 2 out of 4 in a particular direction and the other two is also in a different direction, you have to trade with caution. Trade with caution. Now, here's the thing. For example, if I see that I have 2 out of 4, but one of those 2 out of 4s is like a monthly, I may be more inclined to still take a trade. I'll give you an example. Say I have monthly bearish. All right, so like monthly is telling me I should sell. The weekly is telling me to buy. The daily is telling me to buy. The 4 hour is telling me to sell. I will trade consciously, but I will lean towards buying because I have the weekly and the daily on my side. The 4 hour switches more easily, and the monthly switches very, very, very hardly. It takes a long time for the monthly to switch. So if I have daily buy, weekly buy, monthly sell, 4 hour sell, I'm most likely going to wait to see the 4 hour align with the buy before I buy. So I'll be patiently waiting. I want them for her to enter into a buy, and then I'll start looking for buy trades. I want to have 3 out of 4. You see, so even in a situation like that, I am still looking for a 3 out of 4. So I'll be patiently waiting for the